Wow, so I just realized I'm a little screwed because I gotta follow up these guys, and you can tell from my slides they're very well designed. And I'm talking about taxes, y'all. So I'm gonna go over, generally speaking, how the tax use system works for everybody, generally speaking. So normally, tax season starts, right? So we all get terrified, kind of sucks, everybody gets pissed, people get angry at me usually, really quick. And then next thing that happens is you try doing your taxes, right? So you try avoiding the whole issue, you get annoyed, it's really starting to get angry right now. Then you usually flip a desk or two, and then I get yelled at again, and then you complain, why am I not getting a tax refund? Okay? So I'm going to tell you a little bit about my background. So I specialize in sucking and failing a lot. And to give you an example of how bad I suck, I once started a bubble tea wholesale company. Now, you may not know what a bubble tea shop is, but basically it's milk tea with tapioca balls, right? Now, I did pretty well, and then I failed really hard. So I'm not going to lie when I tell you that when I fail, I get really depressed. Okay, it sucks, kind of works really badly after a while, but one thing that we should all realize is failure always has a silver lining, and I know how does this all come back to taxes. The way it does is when you fail, you usually lose a ton of money, and that loss, it actually isn't that bad after you lose the money, because what happens is you can now go back to the IRS and say, screw you, give me my money back, because I'm broke now. So kind of like how Rob said that he got a huge tax refund, we're doing the same thing. So me, specifically, I lost about probably $20,000, $30,000, right, on that whole business, because what happened was I bought a crap ton of condensed milk, which I found out later, these companies from China were sending in also condensed milk, but they were cut with flour. So their prices were much lower than mine. And what happened was they bought my stock in the end, and I lost all my money because I couldn't compete. They were too cheap. So I took my $20,000, $30,000 loss, and I asked for a refund, and I got $10,000 back. Okay, why? Because I paid that money before, and then I used that money after being depressed playing Call of Duty and all that good stuff. Then I plowed it right back into another business, which I failed again. But the point is I kept doing it over and over. So I just want to know, let everybody know here that I've failed a lot in my life, and if you have as well, it kind of sucks, but just know that there is opportunities from that failure, and there always is. And NOLs, which is what they are, net operating losses, if you have an account, if you want to do it yourself, and even if you can't do it yourself, you can always go to something called a VITA program, which is a VITA. It's free. It's from the government, it's from the IRS. They do your taxes for free, and you get a refund back, okay? Refunds are good. They're your friends. You should get some. All right, now, then there's the other situation where you get a refund, and then you start off going to H&R Block, which please, dear God, don't. Then you go to February, which you're shopping, very happy. You come here, you get broke. March, you spend a little more money, and then you go to ramen again in April, right? So this is the process that we go through most of the time. Now, that's not really what you want to do. You want to just stay rich and kind of be one of these guys, right? Now, the first thing we're going to talk about is online sales tax. This is a foregone conclusion. I don't really care what anybody says or thinks. You're all screwed, okay? It's done. 27 states right now already have it, and this is just the beginning, right? Now, what online sales tax is right now, the reason why it's always worked to our benefit in the present is because of one case. You don't really care what it is, but it's Quill v. North Dakota. And all that says is you got to have something called nexus. It means you got to have some kind of connection to something, right? Now, all this law does is simple. It tells you, you know that one connection you used to have? Doesn't matter anymore. Sucks for you. Boo-hoo. But actually, it's good for us. Why? Because if we let states do what they want, it actually always ends up being, one, more complicated, number two, more expensive, because you have to understand, sales tax is not a let's work as a team kind of situation. It's a Pareto principle. Somebody's got to get the money, and it's going to be them or you, and it's always going to be them. So by actually making this law, we're actually benefiting by not having to let them screw us in the future. So I know it sounds bad, but it's not as bad as you think it may be. So just understand that this is coming. It's going to be valuable for all of you to know. In different states, there's different rules. For example, in New York, I once had a client. They were Fortune 500. And you may not think ebooks or these products are taxable. They could be. And the reason why is because if it's coming from, let's say, a computer program, which you may know how to do, obviously, if it comes from that, then it's a report. and it's an informational report. So back in the day, when all of us didn't have computers, right? When you used to get in the fax, that really crappy stock tip, well, that's all taxable. And that's the stuff that they're going to use against you. So this stuff does matter. Next, incorporations. Now, why am I asking all about all these things specifically? The only reason I'm actually talking about any of these things is because I actually got specific questions from the crowd here. So people ask me when they should incorporate, and the answer is never, in my opinion, unless one of these three things happen. Or you want to use Stripe and you're not from America. All right? Now, that's a good question. People ask. So if you want to incorporate, and number one, you don't have any of this stuff here, that means that you shouldn't incorporate. You should use a DBA, doing business as. It's cheap, it's easy, you get to fake it till you make it, and I'm really good at that because that's exactly how I do all my businesses. If you don't want to show your social security number, you can get a tax ID number from the IRS free in 5 minutes, and then you're good as new. But if you have liability, then yeah, you should incorporate because you don't want to get screwed. If you have profit, then you really want to start getting incorporated because it does help you save money if you do it right. Lastly, if you have an investment, then you just have no choice. And they're always going to stick your ass in Delaware, which kind of sucks, just because it's a lot of paperwork for you. And moving on. So what do you do when you want to incorporate? You talk about pass-throughs, you talk about corporations, and generally corps suck if you're in our crowd right now, just because they're much more expensive and they cost more. Pass-throughs are cool because they save us money. Now, there's a crap ton of different versions out there. So there are LLCs, LPs, personal service corporations, all this other stuff. You don't want to care about any of them except for probably an S Corp or an LLC. Now, an LLC is good. It's easy to do, not too expensive, blah, blah, blah. But the key point and difference that most people will talk about is the self-employment tax. It's expensive, it's painful. Some other guy asked me about it before. It's like 15.3%. Anything you earn on the LLC will be taxable. All right? So you'll always pay 15.3% almost on any income from the LLC. Whereas an S Corp, you're not going to avoid it completely, but it helps you avoid some of it. So how does that work? Simple. You have a company, you create an S Corp. It's very simple. It's a single page. You suck it in. And then what happens is you pay yourself a salary. Okay? Now, on that salary, you will pay the normal Medicare and all that good stuff. Now, if you get a K-1 on the extra distributions, then that is actually a dividend. It's not taxable because a dividend is not earned. So that's how that works. Okay? Now, how do you know what exactly you should pay yourself? It's a really good question. Normally, that's where people get screwed over. All right? So I like to use stats because I want to not get I'm not going to use the F word, but screwed. So the way I do it is I use the Census Bureau or Department of Labor, and I figure out what is my role in the company. All right? If you're a developer, figure out your destination, your location, and okay, I make $60K in maybe 80 New York, maybe $40K somewhere else that's cheaper, and then you pay yourself that amount. And if they complain, be like, okay, this is what the government says, leave me alone. And you're a good place to be. Now, what happens if, let's say, you make $50K, and based on your location, you're making more than that? So basically, at that point, you're not going to really save any money. So it's catch-22. You have to figure out yourself. Lastly, tax credits and deductions. Now, in this talk, there's no way in 12 minutes I can really tell you everything you need to do your taxes. It's just not possible. My job here is really simple. Hopefully, I give you enough information so that when you do talk to the next accountant, he's not going to be a dumbass. Because realistically, you're going to go through 4 to 5 accountants, and that's normal. You may get lucky, you may not. Now, when you talk to these people, though, you need to know some things so that it might help you. Everyone in this crowd generally will benefit from these two things, R&D tax credits and the domestic production activities deduction. R&D is great because why? We're all developing software. So it wasn't always available to us, but ever since 2007, hooray, now the laws changed. Our rules are nowhere near as good as the Canadians because they get like 75%. We do not get anywhere near that. So how much is this worth? The way to calculate that is simple. Every $50,000 you earn, or pay, that you pay someone to do development, you can get about $2K. All right? Nice little even number if you meet all the requirements. All right? Requirement is you have to make money. Second requirement is if you are a pass-through entity, which you probably are, you must have a W-2. So doing these two things probably only works for you if you are an S Corp with a W-2. Make sure you remember that, because otherwise you're doing something that doesn't help you. Okay? So with an S Corp, with your W-2, you can then deduct your own salary, which is nice. You pay yourself, you deduct yourself. Great. Then domestic production activities, that will get you about, I would say for $50,000, you'll get about $1,125 back. So in total, between these two things alone, hopefully you'll save about $3,200. Not a lot of money, but good enough. All right? For someone who's making 50K, it grows exponentially, et cetera, et cetera. Now, what are these two things? Well, domestic production activities is actually really funny. This actually used to have a different name. What happened was Japan complained, and then they said, okay, it's true. This is actually unconstitutional. It's illegal. So what the government did is they changed the word activities. And then once that happened, we got the same exact law back, and that's how we have this today. This will give you 9% of your net income. So whatever your net income is, let's say it's 50K, 9% of that, that's your deduction. All right? If you take the deduction and you figure out what's it worth to you, like again, it's worth $1,125 about. So that is two good tips I can give you outright. If you have a question, in all honesty, what I can tell you is you probably want to not call me right now, because if I answer your question, it won't apply to anyone else most likely. But if you ask me later, feel free. I'll tell you whatever you want. And don't worry, I don't take clients, so I'm not like trying to sell anybody or anything. So do feel free to ask me anything else you want. And that's it. So thank you.